Good afternoon, everyone, and thanks for joining us today, wherever you are in the world. I can see we've got a lot of UK, national, international viewers, so welcome to our latest webinar. We've changed the format as we found one of the most sort of popular elements of these bi-weekly and monthly webinars was the question and answer section. So we thought we'd really jump straight into that today and have a good sort of panel discussion. We've got some topics and some polls that will get the conversation going. So we'll make it nice and conversational, nice and interactive. So any questions at all related to property, should be a box somewhere at the bottom of your screen. So as we run through, fill in the question. You can be anonymous or you can put your name in there and we'll cover as many as we can. So thank you for that. We've spoken in the past, we've covered various topics, obviously all around property and property investment. And we found the key questions really that keep coming up time and time again with things like, obviously, what's happening with the market, mortgages, lettings, and how to make the most out of your investment by investing using different structures. Should you invest in your name, limited company name? So those were what we call this, I suppose, the sort of 3 or 4 most important pillars, and as I say, questions that keep coming up from time and time again. So we thought it would make sense to have myself, and my name's Andrew Siegel. I'm the managing partner here in the UK. I'm based out of the Birmingham office, Birmingham, UK. John is based out of Dubai. He supports clients, or him and his team support clients in that region. Mark is not on today, nor is Johnny on today, looks after our Africa office, again, just supporting local clients in those particular regions. And then I want to introduce you to Sophia Kazmi. She's our sort of resident mortgage expert. So obviously she'll be answering any questions on the financing side of things. And that's whether you're a UK-based investor or an overseas-based investor. We have a lot of overseas-based investors. The UK is the most invested property market in the world for various reasons, which I'm sure will come out as we move on. Then I've got Raj Bedi. He's a director and letting expert from Martin & Co in Birmingham. They're a national franchise, so he'll be able to talk about the market sort of holistically and of course about particular regions. Out of the 4,000, 5,000 odd apartments that we've delivered, probably a third of those have been in Birmingham, but in the key markets we're in, the story is similar across those key regions in the UK, and I'm sure we'll cover that. And I've got Conor Kilcoyne. He's a property and tax expert from GetGround, and GetGround have structures which allow individuals to invest in a limited company, and that can give quite significant tax advantages as well. And again, I'm sure it'll come out as all come out in the wash as we run through the presentation. As I say, I'm Andrew Siegel. I'm based here in the UK. I'm just going to run through a couple of slides because I can see, as I say, we've got a lot of first-time viewers. So just want to give you a little bit of history, a couple of slides on our background. If I could have the next slide, please, Sanjana. Thank you. So we were started by Andy Foote, the chap on the left there, who's our chairman. And he started the business early 2000s. He bought a property off plan overseas, 1999 in Spain. He's still got the property today. It's been a fantastic investment, but the customer care, the support and everything running through left a lot to be desired. It was stressful and just wasn't good up front. As I say, it's worked out brilliantly well, but we wanted to, or when Andy first set up the company, he wanted to make this experience a lot better. So for wherever clients are based in the world, we've put customer care, the support and all the support mechanisms in place. We're not one of these companies that do sort of charge for educational courses. We have all the information. We don't charge for any of our knowledge. You might speak to us, you might buy, you might not buy. Despite my youthful appearance, I've been in the property business many decades, and we're happy to share, particularly with the specialists that we've got with us today, more than happy to share with you all that information just to make it straightforward, stress-free, pleasant experience. And our track record speaks for itself. So we've been a distribution partner. I'll explain what that is with some big developers and household names in the UK. About 3 or 4 years ago, we transitioned into Joseph Mews as a rebrand, and we partner with various developers as well as property companies. And quite simply, because of our track record, it just allows us to access the best stock in the country from the best developers and offer it to our clients. If I could have the next slide, please. So we've delivered 4,270 apartments to date. We've got delivering more as we speak. That's across 43 separate developments in various locations in the UK. One of the webinars we do is about how to build a portfolio over the years. And so we have a lot of repeat clients where we're working with them and we're building their portfolio. And we've delivered over £500 million worth of GDV, gross development value. That's the value of apartments we've delivered successfully to date. And of course, that's growing daily. If I go to the next slide, please. We're fortunate. Well, I suppose we make our own luck, and we've got a good track record. Developers love us because we do all the customer care. They just want to get on and build. We joint venture or partner with them to provide all the customer care, and I'll explain what that is on the next slide, what that customer care looks like and what it means. So we'll partner with the developers. They are household names in the UK property market, or indeed globally. Elevate delivered sort of 1,100 apartments, and they win awards in the UK. Phenomenal group to work with. Your JLLs and your Knight Franks are property companies that turn over billions, and we work with them. They're consultancies, and we use them and work with them on the research side of things. And because of our track record, they'll introduce us to developers that maybe they've sold land to and plug us in for the sales and the marketing. As I say, the sales and the marketing is not rocket science, it's pretty straightforward. Where we win and where you win is all the customer care and support. The developer gets the customer care and support, you get the customer care and support. So it's a sort of a three-way relationship between us, investors, and the developer. If I have the next slide, please. And we help with things like specifying product, because today's tenant want more modern facilities, and we've got things like virtual freehold. So we'll very much collaborate with the developer to make sure we're delivering the right product that the tenants are demanding. And it is evolving, it is changing. I mentioned the customer care side of things, and we've got various experts that I'll introduce you to in a minute. And there's a lot of sort of moving parts. You reserve an apartment, then you go to exchange, and when you exchange, you normally pay 20% of the purchase price within a month. Then if it's off plan, you'll get the build updates. So customer care are involved from day one with build updates. 3, 4, 5 months before completion, we're in touch to say, do you want a mortgage? Let's introduce you to our mortgage partners. Do you need furnishings? We've got furnishing partners. So setting up the limited company, we'd probably start at the beginning. Lettings, of course, at the end. So we orchestrate that. And I'd say probably 99% of our clients do use us for that full service. But if anyone's listening now and they're a mortgage broker and you want to sort your own mortgage broker out, that's fine. If you want to let the apartment yourself, that's good, no problem. You can sort of, cherry pick the services, but most people use everything. So we're a one-stop shop for our investor clients, which I think is important, and that's really why we've got such a good track record, because we're looking after you from start to completion and beyond, because we'll look after the customer care side, any maintenance, any warranty work after delivery. Okay, if I go next slide, please. Again, just one slide, just to give you a bit of background. UK is a strong market. If we go back in history, property prices have doubled every 10, 11 years since the late 60s, early 70s. So you could say, if you're looking for, what we want to do is we want to get the best, we work with the best developers, but that's half of the story. We want the best locations, because we want to see the best capital appreciation and rental yields. We want a mix of both. We want to have our cake and eat it. And you can do that with good investments in the right locations. And I mentioned property prices are double. So you could say, well, I just buy anywhere, sit tight, property prices are going to double. Yeah, that's true. But some areas perform better than others. And the amounts of money we're talking at here, if we can get you a 1% higher return or a 1% higher capital appreciation, then of course it's making a big difference. So it's about making the investment work for you in the best possible way. So this is why we work in different locations, in different areas, and they all tend to have something in common. Birmingham, massive city centre regeneration, HS2. Yes, it's been delayed again, but it's coming, and that's only part of it. Lots of regeneration. Derby, again, lots of regeneration. Manchester, again, competes with Birmingham, huge regeneration, huge shortage of buy-to-let apartments in these locations. And we've gone for areas like Wakefield, so it's a sort of a lower price point, huge demand, great rental returns, and great predicted capital appreciation. And we've got Leeds. So we have a range of investments. I'm going to come on now to the panel, and we can do the Q&As, but you'll see at the end, if you want to talk to anyone after the event, we can set up a call. If you want to talk about particular developments, again, myself or one of the team will be involved. And of course, we're happy to help, and we can drill down with cash flow summaries and plenty of content around the locations, the developments and the areas there. Okay, if I could have the next slide, please. Thank you. Okay, just a reminder, as I say, let's keep it nice and interactive. Bottom right there, you've got the Q&As. We'll have some polls just to kick things off, and feel free to ask any questions as we move through, and then we'll bring in and out the various panelists. If I could have the next slide, please. Okay, thank you. And the next slide. Okay, have we got, well, there's Sophia, again, mortgage expert. We've worked with Sophia for many years for both clients based in the UK and, of course, clients based overseas. Who have I got next there, Sanj? We got Raj, brilliant. Raj, as I say, based in Birmingham, can talk anything rentals with Raj, and how we should furnish it, all sorts of things that are interesting, that again can make a big difference to your yields. And then I've got Conor from GetGround, who can answer any questions on how best for individual circumstances to structure your purchase, just to make it very tax efficient, and again, make sure you're getting the best net returns. So thanks for that. Have we got a panel question, a poll coming up first there, Sanjana, just to kick things off? Here we go. Nice one. Brilliant. So we've got a couple of polls just to kick things off. And then what we've got here, what's the biggest factor influencing your UK property investment? Is it mortgage rates, costs, rental yields? What am I getting? What am I netting? What am I grossing monthly? Capital growth potential, tax efficiency, or market uncertainty? If you could just tick one of those and then keep it up for me, Sanj, when we've got that, and then we can run through a couple of the Q's and A's in real time. Here we go. Okay, all right. Well, look, makes sense probably to introduce you. We've got 7% are looking at mortgage rates. So Sophia, probably a good time to bring you in. Give us a little bit of background. What's happened with mortgages? What's happening, and what do we expect moving forward?
Absolutely, it's exciting times because we saw the Bank of England base rate last year peak at 5.1, and it's now gone down. As of May, went down by a further 0.25%. We're now at 4.25% for the Bank of England base rate, and that is expected to continue to go down. Just earlier I was reading actually that initially they were predicting the base rate will go down to 4% by the end of this year. Now some are even predicting it's going to go down to as low as 3.75% now by the end of the year. So it's really good news. Swap rates are also easing. So 5-year fixed rates and 2-year fixed rates have dropped since the beginning of this year. And as a result, just a lot of lenders are now introducing a lot more competitive products. A lot more lenders are coming to the market, and with that, easing their criteria and just offering more competitive products to where they were certainly the last time we had this conversation, and certainly much better than where it was this time last year.
Brilliant. And much difference if I'm based in the UK, if I'm based in the UAE or South Africa?
It really varies depending on the lender. I think on average, one of the cheapest products you'll pay if you're living in the UAE, as an example, or anywhere international. If you're outside of the UK but looking at, purchasing in the UK for investment purposes, you're looking at around about 4.5%. That's one of the lowest rates. So you can probably argue for bicep purposes, it's around about the same, maybe taking off 0.5 percent for a UK resident. So they almost sit at around about the same now. Now,
Okay,
dependent on where you are based and what loan to value you want to go for, that interest rate will obviously vary as well.
cool. And I know from previous webinars, I think overseas clients in particular were worried about how easy it is to get a mortgage. Again, easy to say, but it's pretty straightforward. And you take all the stress and the strain and the hassle and the admin and the paperwork, don't you?
We do, yeah. And I think that's what's so key. And we have those conversations so early on with clients, whether you're buying, whether the property's handing over in 6 months' time or in 18 months' time. We have those conversations as early as possible to give the borrowers an understanding as to what documentation they need at the outset, so that when we do come to starting that application, um, they are prepared and they have those documents ready, accounts audited if need be. And essentially, we manage the whole process. We are the point of contact for everything. So we will package the application for the underwriters. We'll submit the application to those underwriters that we've worked closely with, and we have a designated BDM at those banks that we can work closely with to manage that application and ensure it's pushed through. And then we will liaise with obviously all the other supporting services that come with that, opening a bank account, um, any arranging the valuation, using certain surveyors if need be, or avoiding using certain surveyors if need be, just managing that whole process all the way through to successful completion, and us being there one point of contact for all of those other
Yeah,
ancillary services which come with arranging a mortgage.
yeah, no, it's good. It's kind of a managed process because we've got we're working with the developer, so they want they want to know when the mortgage is in place. So we work with you, we work with the
Absolutely.
developer, for things like because we need to know when we're going to hand over delivery, and that leads on to lettings and things like that. So yeah, it's an orchestrated approach, and it's a one-stop shop for our side, and then we partner with Sophia and her team, so it does make it stress-free and sort of pretty straightforward. And as I said, I know I have a lot of clients, particularly at the moment, that maybe something's ready soon, and maybe if it's off plan in 18 months, or they can talk to you and you can give indicative
Of
rates and say,
course.
look, if your position is the same as it is, on completion, i.e., you're in employment or whatever your financial status is, position, then you'll get a mortgage, and these are the rates. So you can give people a bit of comfort that it's not going to be a problem come completion.
Absolutely. Yeah, even if it's 18 months in advance, we can give you an idea as to whether you're eligible for a mortgage. We'll do a full fact find to give you an idea based on your current circumstances today. Now, obviously, we've had clients in the past who have started applications and then changed jobs halfway through or left jobs. That does sometimes cause issues depending on the bank. But providing your circumstances, we base it on your circumstances at the time, and if they've remained the same, or even if you've moved to another job, but it's a similar setup, if you were, then you can assume that those terms are going to remain the same as well.
Brilliant, lovely. Okay, and we do have, with all the developers work with, we have what I call a get out of jail free card. So you've put your 20% down, and you lose your job, you've been fired, whatever, then we allow contract reassignment. And this has happened, as I say, we've delivered a lot of units, so has happened in the past. Give us notice, we can resell on that apartment for you. So that's quite a nice little, as I say, a little option should your
Mm.
circumstances change and you just for whatever reason you can't get a mortgage. Brilliant, thanks for
Yes,
that. That's
absolutely.
lovely. Raj, let's bring you in. Talk to me about rental yields. I could talk all day about it, but let's hear it. Let's hear it from you and tell me what's happening generally, regionally, and how things are working on the rental yields.
So rents have been increasing rapidly, particularly since lockdown restrictions eased. So kind of from 2020, they've just been growing like really high growth. So I started working in the industry in 2012. From about 2012 to 2020, rents, they did increase, but at a very slow pace. And then just, yeah, since kind of COVID and lockdown, and since kind of things went back to normal with restrictions, it's gone through the roof basically. And I suppose what's helped though as well with rents increasing is with like government policy with minimum wages constantly increasing year on year, tenants are earning more. So it's not really affecting them in terms of their affordability, because at the same time that rents are increasing, their salaries are increasing as well.
Sort of a perfect storm, really, isn't it? And it's driven by many things, supply and demand. I know we do a lot of work, as I mentioned, in Birmingham. There's something like 1,400 in terms of planning applications. There's 14 for 1,400 apartments. The planning's gone in. They may or may not happen, but the requirement is for 4,000 units a year. So we're seeing people gazumping. I know the laws and things are changing, but prices are going up. People are paying maybe 12 months up front. We're seeing units being let pretty quickly, some same day, etc., etc. Are you seeing it strong nationally and locally from that point of view, Raj?
Yeah. So what we do tend to do with the new build apartments is, because we know, they'll be completing at a certain, in let's say July, for example, what we'd do is we call it soft marketing. So in the background, we're basically promoting the development. We're not doing a full-on marketing campaign, advertising it everywhere, but any tenants that are, we're just making people aware of the development. And then we'll then get make like a spreadsheet list of people that have, whether they want a one bed or a two bed and what their budget is. And then at the same time, we're getting landlords come to us that have said, right, I've reserved in this development, it's completing in a month, I want to go ahead with you. So then I've got a one bed, so then we'll match the landlord's property up with the tenant, so that the minute the completion happens, we've got a tenant lined up ready. And then we can take the holding deposit, and within a week the tenant moves in. So it's win-win all round really.
Perfect. We've got that Leeds development that I showed you earlier is the first phase is delivering October, November time. I was up there yesterday and we met, funnily enough, Raj's Oppo up there, the local Martin and Co up there, and a couple of other agents. And there's a show flat there already. So, and we'll have open days and we can get potential tenants along. Not now, it's too early. It's not going to be ready to, as I say, October time. But there's a lot we can do with the developer and the agent just to make sure, once you start paying your mortgage, you want it tenanted straight away. On the live Q&As, Raj, I've got Debbie Johnson. Thanks, Debbie. What is your role if a tenant defaults on paying? How are we looking at defaults? Are you seeing much of it, and what's the story there?
It's quite rare, and I suppose it depends what area you operate in. So obviously we're in quite a high-end area. Rental prices are high, values are high. So, good quality properties attract good quality tenants. So, if you've got a good property in a good area, the arrears rate is you're less likely to find arrears. If you've got a property and obviously a not so good area, then you are going to attract tenants that may fall into arrears. So I'd say if you're an investor, go for the high-end nice areas and you'll get good tenants. Having said that, you never know. So a tenant might lose their job, or things can happen. It is very, very rare. I'd probably say in terms of tenants kind of being in arrears or paying late, maybe like 1% of tenants in terms of actually having to go to court because it's persistent arrears where you need the property back and you have to go to court. I'd probably say like 0.5% of tenants that happens with. So it is very rare, but what you can do to mitigate that is, what one of our USPs actually is that we offer every tenant that we put in a landlord's property, we offer free eviction cover for the lifetime of the tenancy. So if anything was to happen and we have to evict the tenant, all your legal costs would be covered. That's cost about £2,000 to evict a tenant. So all them fees would be covered. The problem is though, you'd still be losing rent. So what you can then do, and this is an additional cost, is you can take out a rent guarantee policy. And what that will do is whilst that tenant is being evicted, your rent guarantee will basically cover the rent. So you won't actually lose anything.
Brilliant. Thanks for that, Raj. Cool. Got some other questions, so we'll bring you guys back in, but I don't want to leave Conor out. So let's bring Conor in. And we've got people talking about or looking at tax efficiency. Do you want to just give us a kind of an overview of, buying in your own name, just a little bit of background on how GetGround work, what you do, and what the kind of options are for buyers?
Yeah, and thanks, Andrew, for having me on. It's very interesting sitting here and listening to the conversation prior. But what I thought was quite interesting there was 33% clicked rental yield and 33% clicked capital growth. And if you structure your investment correctly, or if you structure your investment in a smart manner, you can actually maximize your rental yield, you can maximize your capital growth and your overall return on investment. And I guess what GetGround does is we assist clients in the setting up, structuring, and managing of limited companies. And there are heaps of reasons, as to why one would use a limited company. And typically, you've got a decision to make whether you buy in your personal name, buy in a company structure. But through a limited company, you pay corporation tax versus income tax, which is typically 19% versus 20, 40, in some cases 45%. You can deduct your mortgage interest as well as any other business expense from your UK tax bill. So your service charge, your ground rent, your management, your maintenance, any business expense as well as your mortgage interest can be deducted from your UK tax bill. And then lastly, when you exit that investment, when you go to sell that property, you pay a lower capital gain. So 4% lower capital gains tax when you sell by way of a company structure.
Brilliant. So it's again, like with the other services here, something that you can set up, and if it's setting up bank accounts for non-UK residents, and again, give them a little bit of advice, because you get a tax-free allowance in the UK. So maybe, I know we've got a lot of UK clients on, but if you are overseas and you've got that tax-free allowance, it may be better to buy potentially in your own name or a partner's name. But again, everyone's circumstance, I guess, are slightly different, but can always talk to them and get an understanding of how that works and whether that's the right move for them.
Yeah, absolutely. So depending on your circumstance, depending on where you reside, who you're buying with, what the structure is going to be, we'll sit down, typically host 45 minutes to an hour consultation, understand your requirements, your needs, your criteria. We have qualified chartered accountants internally, and we can help you structure and manage, as I said, the most efficient company structure, whether it's the company route and you're looking to go down as well. We are looking to bring out a few new products to help facilitate personal ownership, as we do fully appreciate that, limited company structures aren't for every single client in the market, as you said, and there are reasons as to why one would buy in their personal name. So we are looking at bringing out products to facilitate personal ownership. So we can offer all of our additional services. So as you mentioned there, business account setup, we might look at bringing an e-wallet. You can then avail of all of our data, our insights, our portfolio management, etc. And then we can offer, hopefully at some stage as well, we can offer personal account filing. And yeah, so we are looking to broaden our suite of products and facilitate and assist every buyer in the market, really.
Brilliant. And I've got a question here, I think from Anonymous, which is talking about if I've got a portfolio or that I've completed on, or I've got apartments, can you backtrack? Could you set something up now into a limited company that's in a personal name as we speak? What's the options there?
Yeah, so you absolutely can. Now, I say that as there will be a caveat, but you can absolutely set up a company structure. You can structure a company, and you can effectively transfer the properties held in your personal name into the company. However, a transaction will need to take place there. So you, as the owner of the properties, will have to sell them to the limited company, even if you are the director in that company. And you will be liable for capital gains tax, and the company will be liable for stamp duty land tax.
Okay.
Now,
Okay, good.
there are cases in which this does make sense, and you can utilize the equity in your existing portfolio to offset some of the taxes and the costs. But again, I must say it doesn't. The majority of clients who we've tried to assist with, it doesn't actually make economic sense, and holding that portfolio in your personal name is probably within your best interest. But again, it's something that we can sit down, discuss, and calculate, what it looks like.
Yeah, and we had this with quite a few clients, that they might exchange. So they've reserved, they're buying off plans ready in 18 months. They've exchanged on 20%, but we allow contract variation. So as long as you've exchanged, or before or post exchange, but pre-completion, then again, because you haven't completed on, there's no stamp duty, no fees, no charges. So again, if anyone's out there that has exchanged, then that's a possibility as well. Cool, brilliant. Thanks for that. Again, see the questions coming in, but if anyone's got any particular questions, keep them coming. Something that came up before was capital growth, and it's an important one. I think I mentioned earlier, property prices double every 10, 11, 12 years. And again, it's easy to have a look. I think capital appreciation is strong. We've done a lot of research at the moment. We've got various guides looking at different areas, but you're looking at the moment around 3, 4, 5%, depending on the areas, in terms of annual capital appreciation. So you've obviously got your rental yields, which will cover the mortgage and give you a profit. We've got cash flow summaries that can show you that, because gross, you're getting £2,000 a month, but what does that mean? My mortgage cost might be 2,100. It's not, but you want to see exactly where you are from a net position. What's left in your back pocket once you've covered things like service charge. We don't do ground rent, but there's fees. Raj's charges, we get discounted charge fees, or you get discounted fees, but you want to have a look at the true net. So you can make money structuring it correctly. Even not structure it correctly, you'll make money monthly on the rental, and also you're getting the yields and the capital appreciation. Really, for me, it's all about supply and demand. Just Google property shortage in the UK. It's crazy. There's on average, there was a BBC article the other day, for every one property that goes on the market, depending on which article you read, between 20 and 25 people going after that property for various reasons. Obviously, cost, affordability. We're not building enough houses in the UK. We never have, we never will, whatever Labour say, or they seem to be making some right noises and sort of moving in the right direction. So I think it's, capital appreciation will carry on. We saw a 0.5% increase last month across the board in property prices, more in some areas. So capital growth is strong. By 2035, I think we have another 7 million increase in terms of population. As I say, we're not building enough houses. I gave the Birmingham example, but it's the same the country over. So for me, as an older landlord, I've never known the market so strong in terms of supply. There isn't much that sort of supply and demand dynamics. Demand's increasing all the time. Supply is diminishing, and that's having a knock-on effect on the rental yields, and of course capital growth. That kind of ties in with one of the other poll answers there, which was that sort of market uncertainty. Again, Trump, Brexit, COVID, nothing happened. Yeah, prices stayed flat, might have even dipped a bit. I can remember buying stuff 2008, top of the market, before recession. All my friends were laughing at me. Guess what? We had a little dip, and now those properties are worth 3 times what I paid for them, 2.5, 3 times. So back in the day, I would buy property off plan, and you could flip it and sell it before it was built to benefit from the capital appreciation in those 18 months. The market isn't like that these days. For me, I think you want to be in it for at least 5 years. As I say, if you have a problem, if you need to sell, of course you can sell, but it's more of a long-term play, really, and that's when you'll get the best in terms of capital appreciation and rental return. If you need to sell fine. If you're just selling to buy something else, why? When you've got stamp duty to, if it's another investment, when you've got stamp duty to consider. So again, 5 years ideally is the time. It's all about building, generational wealth for you, family. With a lot of people buying that want to put their kids. I mean, they've got kids that are 2 and 3 year old, and it's for their college fund. So the longer, obviously, the better there. Cool. I think that covers most of those questions from that first slide. Have we got another poll question there, Sanjana? Okay, brilliant. We might have covered a bit of this, but let's have a look anyway. What do you think is the biggest challenge in getting a mortgage for UK property investment? So understanding eligibility, lack of credit history, high interest rates, limited lender options, lengthy approval process, or unsure where to start. So if you guys tick on that, and then we can get Sophia back on just to run through a few bits and bobs there. Okay, fantastic. Do you want to pick up on those ones for me, Sophia?
Yeah, of course. So understanding eligibility, I think, well, actually, no, the most common answer is a lengthy approval process. So it can be, absolutely, and it can be quite tedious at times. But what I would say is, as we mentioned earlier, Andrew, is that we manage all of that for the borrowers so that they don't have to, because you're right, it can be sometimes quite lengthy, especially if you don't know what documents the bank needs and they're coming back to you in bits and drabs. A document has been certified incorrectly, the wording hasn't been, is not in line with their requirements, or, bank statements are not in line with what they want. They want 12 months instead of 6 months. So all of this, that does add to the process, and that can often double the process, and double the time taken. By the time you submit one document, the initial documentation is out of date. So that can certainly be the case. Every bank with that has different requirement and different packaging requirements. Some want 1 month bank statements, some want 6, and some want 12, depending on where you're based. But we will take away that stress, and we will manage that to ensure that those approval processes are cut down and are as short as possible. So we know at the outset which bank we're going to be submitting the application to, or should I say, when we decide that we're submitting an application, we know who we're going to be proceeding with, of course, and then from there we will package the application together with the borrowers specific for that bank. So that really does help in the approval processes and timeframes. Understanding eligibility is another one, similar to that really, and every bank has its own criteria, of course. So as an example, if you're a first-time buyer living in Nigeria, as an example, Nigerian passport, never stepped foot in the UK, you don't own anything else in the UK, then of course we're not going to be approaching, high street banks in the UK. We're going to be approaching specialist banks who have the criteria to lend to you. So again, we're familiar with those banks that have an appetite, and we will, well, there's no need for you to understand the eligibility, because ultimately that's our job and we'll manage that all for you. And then equally, I think lack of credit history is a common question we often get asked is, do I need to have a credit footprint in the UK? And the short answer is no, you don't. You don't need to have any credit footprint. You don't need to have a credit report in the UK. Some banks may ask for a credit report from where you live locally, but again, that isn't always the case. It's based on your income. We'll look at bank statements as well, but there isn't any kind of credit footprint required for the UK. And high interest rates, 15% of you have stated as well. Interest rates have, they are higher than where they were, let's say 3 years ago, but they are certainly lower than where they were this time last year. And the trend is that they're expected to continue to go down. And that's why a lot of our clients at the moment are going for either shorter fixed rate periods, or they're going for tracker rates right at the beginning, a rate that directly follows the Bank of England base rate, as an example, so that you're benefiting from those rate reductions. So as the Bank of England base rate continues to go down, your rate will mirror that, and subsequently your monthly mortgage repayments will mirror that as well. So that's the benefit of going for a tracker rate, or going for a shorter fixed rate period, locking it in for 2 years with a view to remortgage in a couple of years' time when rates have gone down in line with where they're predicted to go. And then finally, limited lender options. 8% of you have selected that, and unsure where to start. I suppose I'll answer both simultaneously. Is similar to what I said before. To summarize, we are a whole of market mortgage brokerage. So we have access to over 750 lenders across the globe. By no means are we limited on the lenders that we can approach. We work with your typical high street and and retail banks. We also work with a lot of private banks, private equity firms, funds, and a lot of specialist lenders. So with that, there are a lot of lenders and a lot of different lending solutions and structures that we can look at to meet your requirements. And unsure where to start is booking a consultation, I would say, with Andrew, with me. We'll have an understanding as to what you can afford, what you can borrow, what sort of investments are out there, what your cash flow is going to look like, how is the investment going to work for you, and then we'll put those cash flows together for you. But Andrew, you can probably answer that one a lot better than I can.
Yeah, definitely. Yeah, come to us. We've got cash flow summaries, and yeah, we can help. And there is a reasonable amount of admin, let's be honest. And I'm the world's worst. I hate admin, but you just give everything to Sophia as long as you're giving her what she needs, and when she's asking for bank statements and bits and bobs. And on that note as well, we work with, which aren't on the call today, but we have panel solicitors. So these are solicitors that other clients have used, and they do a good job. Because when in the solicitor world and the conveyancing world, some can be a little bit slower than others, and it can feel a little bit intrusive because there's money, AML, anti-money laundering, KYC, know your client. It's not us. It's not the solicitor being nosy. You have, this day and age, you have to meet all of those. You have to meet all of those demands, as it were. But again, if we'll work with you, and the solicitors are good, Sophia and the team are good. Give them all the information. They'll sort everything out and come back to you and say, right, these are the rates. This is what we can do, etc., etc. But this is what we need from you, and then leave them to do all the headache and the paperwork and the admin. And it's there. It's a necessary evil, but it's easily doable with the right sort of attitude, really. On the mortgage side, we cover earlier on, Mr. Kiffy, what are the prevailing interest rates and what loan to value do financiers offer? Loan to value rates for onshore and offshore clients, maybe?
Yeah, loan to value, I would say for investment purposes, whether you're living in the UK or you're living overseas, you're looking at anywhere between, I would say up to 75% is the top end. There are a couple of lenders that maybe go up to 80%. And then dependent on where you're based, sometimes it's 65% loan to value. But yeah, I would say it's between the 65 to 75% loan to value mark, typically for investment properties.
Cool. And on that note, Yi Yang is asking any minimum amount for mortgages for foreign investors. I'm based in Singapore.
With some lenders, and again, it depends on what passport you hold, because then we can approach certain lenders. Most international lenders start at a minimum loan amount of £100,000, and we like to also keep it above that, just to keep our options open. Now, there are lenders that will go lower than that. There are lenders that will go to £50,000 if we wanted to. So yeah, in short, there are a range of lenders we can approach.
Brilliant. Thanks for that. Raj, let's get you back on. What common mistakes are landlords still making in today's market that could be costing them better tenants or higher rent? So what should they be doing, day to day that can help?
Say one of the things that we find a lot of landlords, they're really focused on the monthly rent figure. And that might mean, let's say that they want to get £1,000, but it's only worth, say, £850. So, to get £1,000, that might take them 2 months to find that tenant, so they have a void period. Whereas if they had £850 and it was to let straight away, over the actual year they would earn more from renting it for £850 and having 12 months of £850 than having 10 months of £1,000. So that's just one thing that's one thing that I'd recommend landlords, whenever they're speaking with their agent, always take the advice from the agent of what the actual rental value is, and maybe avoid going over that rental value.
And anything on furnishings, furniture, because I know we always say Birmingham particularly is what we call a furnished market, so we want
Yeah.
them furnished. What's the story there, Raj?
So we're finding a trend in terms of tenants want, the better quality furniture. So probably about 5, 6 years ago, you could get away with just very cheap basic furniture, but there's more kind of the expectation is a lot higher. The apartments are a lot more higher spec. So you can't. It doesn't make sense to have a high spec apartment and then you know very low cheap furniture. So that's something that I would definitely recommend when you're looking at furniture packs. If you bought a high end apartment, you need the furniture to mirror the standard of the apartment as well.
Yeah, and we can advise on furniture packs. And I know back in the day, Raj, we did like a split test. We'd have an apartment that wasn't very well decorated, wasn't very well furnished. Well, it was, but it didn't have the finishing touches. And then we
Yeah.
put in things like a feature wall, nice rugs. Again, not costing the earth, but I think it was something like you get £200 in that example. It was a top floor. We were getting something like £200 a month more just by a bit of tasteful interior design.
Yeah, that definitely. So one thing you can do as a landlord is go maybe cheaper on the actual furniture, so the sofa and the bed, etc. But then actually spend more on kind of the finishing touches, like the wall art, the rug, the bedside lamps, and just give it that show home look. So a lot of the apartments now that we get furnished, we get feature walls, acoustic paneling, and these things don't cost ridiculous. To have an acoustic panel is like 300 £300. So it's not like, through the roof, but it can really make the apartment look special and help your apartment get rented over someone else's.
And again, if you're local, national, or international, we can do that. And we again, with the development I mentioned that I visited yesterday, we've got different blocks and different releases, so we won't flood. You won't find 10,000 apartments all ready to rent. We try and manage it and throttle it back. And clients take longer to get mortgages or whatever. So we have a natural stagger when we're delivering in a development as well. So we'll always try and help manage from that things as well. Let's see what we got else for Raj. But if someone wanted to buy in Birmingham today to achieve the strongest rental return over the next 2 to 3 years, which area would you suggest? Is there any particular areas in the core? We tend to develop in the city centre, but are you seeing anything along any advice there?
Yeah, so I'd say, the areas within the city centre, the really popular ones are Jewellery Quarter, Digbeth. Digbeth's probably bit more up and coming in terms of it's not fully developed yet. There's a lot more to go at with Digbeth. It's in its infancy, whereas Jewellery Quarter is more established. And then you've got kind of the city core, which is like bang in the middle of the city centre. Obviously, you'll be paying a premium for that, but the in terms of location, that's probably right bang in the city centre. You can't really beat that.
Brilliant. Okay, thanks for that. That's great. What else? While we still got you there, Raj. What advice would you give to overseas landlords in 2025 who are trying to manage their properties remotely? Again, it's all pretty straightforward there. I've got a poll for you, Raj. Sorry, I've jumped the gun there. Let's fill that in and see if you can answer that one for me. So let's do the old Raj poll. Long void periods, finding reliable tenants, managing the property remotely, rental yields not meeting expectation. Let's see if we can pick up on that. Sorry, I'm freestyling it a little bit here, but we'll get there. We'll get everything covered. And yeah, overseas again, they just need to talk to you if they're an overseas landlord, don't they? And then you can help them, advise them, and work with them.
Yeah, but being an overseas landlord, it's not any different really to being a UK landlord in terms of how we deal with and how involved an overseas landlord can be, because these days we've got WhatsApp, Zoom, telephone, email. It's so easy to communicate these days. So yeah. But yeah, okay. Then looking at these poll answers, so the most popular one in terms of biggest concern, 43% of voted managing the property remotely. But yeah, as I've said, it's you know, if you're overseas, you wouldn't. Why would you want to even attempt to manage the property yourself? You know, you can rely on a local letting agent that can basically do everything for you. You know, from start to finish, a fully managed service is what it's called, and it's basically, you know, it's stress free from a landlord perspective. So I don't think that should be a worry. Maybe it might be a worry actually of not knowing who the local agents are, but that's where people like Joseph Mews come into play. And you know, obviously we're the recommended agent in Birmingham, but there'll be, you know, apartments you sell in other cities, you'll have recommended agents there. So you know, wherever, when you're buying the property, you can always find, you know, speak to the rental agent at the same time as well, and just get a feel for them, and you know, speak to a few and see who you're comfortable with. In terms of rental yields not meeting expectations, I think just do your research beforehand. In terms of when you're reserving, find out the rent that you're likely to achieve, and then you know, you should be okay on that aspect. You know, there's always going to be a little bit of you know, no one can predict the exact amount of rent anyone's going to get, especially on new builds, because you don't know, you know, it depends as well on various factors. What are other agents trying to charge? But as an agent, we have a good idea, a very good idea. So if we get it wrong, might be £50 out, maybe £100, but it might actually be £100 out in your favour, and actually you get more than what you were expecting. But rent's always increasing. So even if the first year you got £50 less than what you were hoping for, you know, year two, rents would have increased, so you'll probably get more than your £50 that you didn't achieve the previous year. Brilliant. So yeah, another one with 21% voted compliance and legal issues. To be honest, there's a lot of compliance when it comes to lettings, but it's not for a landlord to worry about. You know, if you're using an agent, that's the benefit. Let them deal with all of that headache. You know, that you're covered as well, because if you're instructing a letting agent to fully manage your apartment, you know, they've got a responsibility to keep you compliant. So the passing the buck from yourself to them. And then yeah, finding reliable tenants, 14%. A lot of, like, to be honest, you can be, as a landlord, you can be very involved in that tenant selection. So the way we work it is, once we find you a tenant, we'll present that tenant to you, give you all the background information, you know, tell you their ages, jobs, salaries, and then you decide, yes, reference them, no, don't reference them. And then obviously we do the referencing, and then from there you can even see a copy of the referencing report. So you can, you know, there's full transparency, and then you can then make an informed decision. Like I said, I think at the start of the webinar, if you're buying a good property in a good area, you are likely to attract good, professional, reliable tenants. You know, so yes, there are landlords that opt for areas that are cheap and, you know, not the best sort of areas that you typically get the best tenants, but sometimes them cheap areas, they can yield high, but you've got all the risks involved in having unreliable tenants. So stick to a good area. That's very important. No one actually voted long void periods, which is good, because I guess everyone understands that there's a shortage of supply. So you know, having a long void period, just, it's not going to happen. You know, yeah. That's why residential property is so great, because there's such, you know, great demand for rental residential property. You don't have void periods. It's not like commercial property where, yes, okay, you can get 10-year leases on a commercial property, but when your commercial property goes vacant, having it vacant for a year or two can happen. You know, that's why I love residential property, because I know I don't have to worry about the void period. If I have a void period, it might be a few weeks. It's nothing significant.
Brilliant. Thanks, Raj. I've got one I'll take again from Yi Yang. Thanks for that. Is it better for long-term rental or do short-term rentals for first-time investors? Some developers don't allow it, some do, and we've got a mix of both, and we've got a good short-term letting partner. Your costs are a little bit higher up front because there's more work because you've got tenants coming and going. But again, we've got a partner that can manage that. And sometimes, depending on the area and the location, it'll take 2 or 3 months to ramp up. And you've got the apartment, because if it's short term, lets us in your name. So you're covering the council tax, you're covering the utilities bill. So when you look at the gross is a lot higher, but also that you've got more cost, but the net can be higher. And we do have cash flow summaries on various developments, and we can manage that because I've got a good partner where they've reduced the rates, so it can be quite a lot more profitable. And we've got some developments as well that are geared up more for that, where we've got cinemas, gymnasiums, little cafes and restaurants, golf simulators, gyms. So again, we do have development. Funnily enough, it was the one I was up near in yesterday near Leeds. That's more suited to that because of the location and because of the type of facilities. So again, we can always talk to you about particular developments, but yeah, sometimes it can be more profitable to do that. And again, for mortgages and setting it up, whether it's a limited company, mortgages, whether you're short-term letting it or long-term letting it, that's all doable. I'm mindful that I've got a few other questions that I'll come back to, but Conor, I think if I get this right now, we've probably got some poll. There we go. Get it timed right. So a poll for Conor. Do you prefer investing as an individual through a company structure? We might have covered this, but let's just throw this one around. So do you prefer investing as an individual investor through a limited company or not sure? And give us another little summary and give us some stories around that if you can, Conor.
Yeah, no problem. I'll wait for
Lovely.
the results to come in. Yeah, interesting. And that's probably aligned with what we're seeing at the moment. As I was saying, or maybe I haven't mentioned it yet, over 65% of all buy-to-lets currently in the UK are done so by limited company structure. And traditionally, the setting up of a limited company and certainly the ongoing management of a limited company would have been seen to have been, very long-winded, very taxing, and very costly for the investor, which would see them have to instruct a solicitor, separate tax advisor, even an accountant when they need to process all the ongoings. And simplicity is the key nowadays, not just about GetGround, but with the use of software and technology, you can have companies set up or created in 20 minutes, incorporated in anywhere from 1 working day for a UK buyer, maybe 3 to 5 working days for anyone overseas. So certainly the simplicity and the ease has gotten a lot better. But there are differences, and as I was alluding to earlier, there are certain circumstances and certain reasons why one would buy in their individual name or in their personal name, and then there are heaps of reasons as to why one would buy in a limited company structure. And the main reason is the tax efficiency, but there are other benefits. You limit your personal liability. It gives you flexibility on purchase. You can structure the limited company with different shareholders, different share structures. So you can buy with family, you can buy with friends, you can buy with colleagues, however way you wish. And then it also gives you flexibility on exit as well. So you can buy and sell property really easily, improve estate and inheritance planning, and then access to really well-developed mortgage markets as well. Because I know historically that was always a question, and Sophia can probably go into more detail, but there's a greater access now to the mortgage market through a limited company structure. But yeah, they're kind of the key points. But as I was saying, it really is individual. It really does depend on your circumstances, your criteria, your needs and your wants. And with GetGround, or if you join a call or wish to inquire, we'll walk you through the benefits of investing in a personal name, investing in a company structure, and you can make a well-educated decision, or you can come back with a whole heap of questions for us, and we can help you along the way.
Brilliant, thanks for that. I think we're down to the last sort of few questions. If you've got any more, keep them coming. But I think a couple for you, Sophia. Robert, thanks for coming on board. I've got Robert Howrand. I know he's purchased with us and I think completing towards the end of the year. Mortgage, if purchasing through a limited company, is personal income of interest and why?
It depends on the bank, really, and it depends on a lot of things because some banks will top slice, so they'll look at a combination of your personal income and the rent that the property is going to achieve. So sometimes if your personal income is required to get us to the maximum loan to value, then we'll use that. If not, then we can assess it purely on the rent. Sometimes it's easier to just use the rent because it's sometimes less documentation. So if we can go down that route and get the loan to value required, then we'll go down that route. Otherwise, if we need to use our personal income, then yes. However, normally most banks, even if they're lending, even if you're buying through an SPV, you still need to show evidence of proof of income because ultimately you are still the UBO, you are still the beneficial owner of that company, and ultimately you still need to be underwritten yourself. So there will still be some sort of element of, where have your funds come from? What is your source of income? Where has that deposit derived from?
Thank you. And then I've got, and we might have covered this, apologies. Where are we at the moment with 1 year fixed interest only rates currently? What's the ballpark there? I know we talked about mortgage rates earlier.
Yeah, you're looking at, I would say they start a little bit high. Well, it depends on the lenders. Some are a little bit higher, because ultimately a lot of people may want to go for a 1 year fix with a view to remortgage at the end of at the end of that 1 year facility onto a better product. You're looking on average circa 5%, I would say.
Cool.
It depends now if you're a UK resident, that's going to be lower, and depend on where you're based around the globe, maybe a little bit higher, but average 5.
Brilliant. I bought something April last year, so I'm 1 year and I did a 2 year fixed deal, but I wanted the property. It still works. And I hate to say it, as a property guy, I'm on 7.09%, but hey, it's gone up in value. It's working. I did a 2 year fixed and I'm going to, next April, I'll get it down to whatever. So again,
Yeah.
don't be frightened about the rates because that's working for me at 7.09 and I'm UK based in the UK. It's all about, as I say, capital appreciation, rental yields, covering that. Interest rates are coming down. We all know, property is a good investment, or I hope we do. But yeah, might be one. I think from Sonny Chauhan might be one. We'll put up a slide in a minute, and you can click on for some follow up. So if it's for me, property, the market, Raj, Conor, or Sophia, we'll contact you. But Sophia's just saying, I'm a UK citizen and resident. My husband is based in East Africa with a foreign job income. Can we qualify for a non-investment property based on his income? Does that make sense?
Yeah. Yeah, absolutely. Yeah, you can say you want to buy the property for personal use as opposed to for buy-to-let purposes. Then yeah, absolutely, there are lenders that would also be able to look at that. It would just be based on your personal income instead of any rental income that the property is going to generate in that case.
I think it's safe to say that everyone that wants a mortgage, one way or another, we get them a mortgage, don't we?
Yeah, indeed.
Good. Debbie Johnson. Can foreign, oh no, that one's gone. Oh, here we go. Can foreign investors pay in extra to reduce the interest charge if rates go up and withdraw later if needs be?
So you can't reduce the interest charge, but the interest rate is you're agreeing to an interest rate. So when you take out a mortgage, you're agreeing to fix it for either 2 or 5 years, or you're agreeing to a tracker rate for a particular period of time. So that percentage is not going to change. However, what you can do is you can make overpayments often with most lenders, and that goes towards the outstanding loan amount, or sometimes the original loan amount. That goes towards the principal balance. So that is normally allowed, and that varies depending on the banks. It can be anywhere between 10 to 20% of the loan amount, typically.
Yeah, my rate, it was a particular, I'm sort of pretty maxed out on mortgages across the board. So that rate I got 7.09% is for 2 years. Obviously, I'm a year in, so I'll reduce that and I'll get a new mortgage. And with that particular lender, I can pay off 10% per annum with no penalties,
Penalty free.
no fees, and
Yeah.
no charges. Cool. Thanks, guys. Yeah, I think we've covered quite a bit there. We're recording this as well. So let's have a look. Let me thank everyone first. So Raj, thanks. Conor, brilliant. Some good insight information. Probably had more mortgage questions, but thanks for sitting through them. And we did one of these mid last year. The other webinars are all on the Joseph Mews YouTube channel, and we might talk about different developments or might go into more detail with Conor or Raj or Sophia. So have a look at those. And then I think we'll probably have another slide coming up, probably with an offer, and then one where you can contact us. Here we go. So final poll or final question. Tell us where you are in your investment journey. Tick the box. I'm ready now. We can talk to you about, obviously, the different investments and whether it's short-term, long-term, depending on location, UK mortgage. That can also be overseas mortgage. Just to clarify, Sophia's perfect for UK onshore and offshore. Speak to Raj, speak to Conor, or just exploring for now. Keep me updated. We won't hound you, but if you want us to contact you, click on the buttons there, and we'll come back to you today or tomorrow. Might be us individually or one of the teams, depending on the volumes that we get. So bear with us. And then I think we might have forgotten any other slides, Sanj. Are we done? Okay, brilliant. So special offer. We're looking if you're reserving within the next, I think it's 4 weeks. We've got furniture pack offer, so we'll cover the furniture pack, and we've got a contribution as well, up to £1,000 towards your legal fees. So again, that's probably the top box there. I'm ready to invest now. Please get in touch. So yeah, thanks guys. Thanks Anjana for running all the behind the scenes shenanigans, and thanks guys for coming on board. And hopefully we'll see. And thanks you for joining. And we'll see you all soon, and hopefully be in touch.
Wonderful. Thank you very much,
Thanks.
everyone.
Cheers, guys.
Thank you, guys.
Thank you.
Bye bye.
Bye-bye.